Seoul's central bank has kept its benchmark interest rate frozen at 3.5% once again amid persisting inflationary pressure. Meanwhile, the country's growth outlook has been revised upward to 2.5% for this year, taking robust exports into account. Our finance correspondent Lee Soo-jin reports.
South Korea's central bank kept its benchmark interest rate steady at 3.5% as widely expected amid ongoing concerns about inflation. The decision was announced on Thursday following the last Monetary Policy Committee meeting of the first half of the year.
While inflation is slowing, given the signs of recovery in economic growth, the exchange rate volatility, and geopolitical risks, we have decided to maintain our current monetary tightening stance.
This is the 11th consecutive meeting that the BOK has decided to freeze the rate. The base rate was last raised in January last year to 3.5%, the 10th consecutive rate hike. The rate freeze decision this month comes amid ongoing concerns about inflation. While the Consumer Price Index, a key gauge of inflation, fell below the 3% range in April for the first time since January, consumer prices saw on-year increases of 3.1% in February and March. Prices for agriculture goods, livestock, and fishery products were up 10.6% on-year in April. Fresh fruit saw huge price increases, with the price of apples up by more than 80% on-year and pears up by more than 100%. The BOK's decision was also influenced by the U.S. Central Bank in its most recent May meeting, deciding to keep interest rates unchanged as it's unlikely that the BOK will cut interest rates ahead of the United States, with the current interest rate gap at its largest ever at 2 percentage points.
If the interest rate differential is large, then you would see more capital flows going out of Korea. I think the Bank of Korea will wait until at least the end of the year to see whether the U.S. will lower their interest rate or not.
Meanwhile, the BOK also raised its economic growth outlook for this year to 2.5%, up from 2.1%, further adding to projections that the key interest rate will not be lowered for the time being. The BOK governor said that the forecast has been raised mainly because of external factors such as the robust global IT sector and strong growth in the U.S. economy, as well as signs of recovery in domestic demand. And this year's inflation forecast was maintained at 2.6%. Moving forward, the Bank of Korea says they will continue monitoring prices and geopolitical risks and will maintain a monetary tightening stance until it has more evidence that inflation is coming under control. Lee Soo-jin, Arirang News.